Welcome back, and continuing to work through the retiree years of Step 5 in the Wealth Steps Order of Operations. And this one, we're going to specifically talk about real estate strategies, maybe a little bit of the low income years in retirement. A lot of times that's pre-retired, but real estate is an area that I see a lot of people, especially when they're in their accumulation phases. They are focused on one or the other, and they never really zoom out one layer to where they can see the full picture of their portfolio. And so whenever I look at a portfolio, I'm looking at diversification on a couple different levels. One, on a tax diversification level, meaning what assets are in certain account types that are going to get certain tax benefits, whether it's tax deferred, tax free, and then figuring out what are the assets that have been diversified. So whether it's real estate, you've got 5 real estate properties that you've accumulated over the last 10, 20, 30 years, or maybe it's what type of assets are inside of the investment accounts. There are multiple meanings behind diversification: tax diversification, asset diversification. There's other meanings of diversification. So it's not a one size fit all. You got to figure out, am I diversified? Am I tax diversified? Am I real estate diversified, be it multifamily or single family or commercial if you're a real estate guy or real estate gal? Either way, we got to figure out what real estate strategies, if any, are available to your situation. So if you're not a real estate individual at all, you never bought real estate other than your single primary residence, there's nothing wrong with that. Most likely you're showing up in retirement with, maybe a pension, maybe a portfolio that's in your 401k, 403b, some type of retirement portfolio. That strategy is going to be completely different than a real estate strategy. And what do I mean by that? I mean, you have to figure out, do you want to be a part of the real estate industry? Do you want the headaches or sometimes ease of managing tenants, or do you want to give up 10% to a property manager and let them deal with the real estate headaches? I'm pro real estate. I'm pro investment account. I'm pro retirement account as far as 403bs, 401ks. I look at a lot of this stuff completely neutral. I don't look at it as one is better than the other. I look at it as, how do they work together? How do they complement each other? And so figuring out, if you're 60 years old and you've already got $2 or $3 million in your portfolio, maybe only you got 500,000 in your portfolio, it doesn't matter. I would say diving into the real estate world that late in the game probably isn't the best situation. You can look at it like this. A lot of people are playing a financial game, whether they want to acknowledge that it's a game or not. There's different moves, there's different strategies that have to be made at a certain time. And part of the game is recognizing when you won the game. The whole purpose of investing is to build a portfolio to get you to a point where you can live off that portfolio. And if you've already accumulated $3 million, $2 million, $1 million, and you decide that you can live off of that portfolio, and you've got your income strategy, you know what that portfolio is most likely going to do as far as rates of return. Why take a risk on playing a real estate game? Why play a risk into keeping your money in the market? If you've won the game, maybe it's time to get out entirely and secure all of your portfolio. You don't have to be in the market. That's one of the areas that I would call a mass marketing trap, is that a lot of financial advisors, if they only got paid off of assets under management, meaning they're managing your account, why would they come and tell you, hey, you won the game, it's time to take your money out of the market, because you're risk averse already. You don't want to take risks, so why are they trying to keep you in the market? That's what you have to ask yourself. Is the advice that you're getting, is it matching up to your goals? Is it matching up to your risk profile? If it's not, then you got to figure out, are there other options on the table? With your real estate, if you've played the real estate game for 30 years, you've accumulated 10, 20, 30 real estate properties, odds are you're not going to shift over into some type of stock market portfolio, that kind of stuff. And there's so many tax savings, tax strategies with real estate, whether you got cost segregation studies, You got different depreciation schedules. You've got the ability to write off so many different things as a real estate investor. And if you're a full-time real estate investor, maybe you've achieved the full-time real estate investor status. So that's going to give you even more tax savings opportunities. The reality is a lot of individuals got to financial independence via real estate, not the market. And then on the other hand of things, there's a lot of individuals that got to financial independence via the market and they don't want to play the real estate game. There's nothing wrong with that. We have to figure out what side of the fence are you on, or maybe you're in the middle and you've played a little bit of both sides. You've played a little bit of the real estate game, you've played a little bit of the stock market game, and now you're trying to figure out, can I pull the wealth out of both of those, both the portfolio and the real estate that I've accumulated over the last 20, 30 years, and figuring out how do I take these assets and turn them into an income stream, or how do I turn them into a scenario that benefits my family, benefits my children or my spouse, my partner, in a tax efficient manner, while also realizing that you won the game. You don't have to be in the market. You don't have to continue playing the real estate game. There's nothing wrong with taking your chips and cashing out. The goal of the casino is to keep you playing the game as long as possible. That's why they got the fancy lights. They've got all the bartenders, the ladies coming to give you your drinks. You don't have to play the game if you don't want to play the game. You have to figure out, did I win the game? Have I reached or accumulated enough assets that I'm done and I want to tap out? That's the decision that you have to make. So we'll talk about low income years in the next one, but this is just high level real estate strategies specifically for retiree years. That's it.